we can see a real opportunity being a junior to quick to market, embracing new technologies and really pushing ahead of our larger peers.
Joining me here today to talk about future-facing materials and ESG, looking at the key future metals for a sustainable future, I have Scott Williamson, Managing Director at Blackstone Minerals. Thanks for joining me here today.
Thank you.
And do you want to just start by giving us a bit of background on Blackstone Minerals? How does your vertically integrated business model work?
Yeah, so at Blackstone, we're looking to restart the previously operating Ban Phuc nickel mine, which is located in northern Vietnam. We're looking to restart the mine and produce nickel concentrate, but also looking to build a downstream refining business as well. So a downstream refinery in the region will convert nickel concentrate all the way through to the nickel precursor product, which is required for the lithium-ion battery. So that's a chemical product which includes nickel, cobalt and manganese in a ratio of 8:1:1. So that's the product that you combine with lithium hydroxide to produce a cathode for the lithium-ion battery. So it's vertically integrated all the way from the nickel in the ground all the way through to the chemical products required for the lithium-ion battery.
Great. And maybe we can look at the nickel industry in particular in a bit more detail. And then also, what's happening in terms of the nickel markets. And then also, Blackstone's looking to produce a green nickel product. What's the pathway to that green nickel?
Yeah, so what we're seeing is a structural shift from the stainless steel industry into these chemical products required for lithium-ion batteries. So this is a new move for the nickel industry. So at the moment, the majority of nickel sulfide goes into a stainless steel supply chain through a pyrometallurgical technology called smelting. Our preference is to focus on the chemical products for the lithium-ion battery, and we're looking at a hydrometallurgical technology which is better suited to these chemical products. So instead of going down a smelter path, we can go directly from the nickel concentrate into the hydromet process called pressure oxidation, which allows us to produce a much cleaner and greener product. So the benefits we have in the Vietnam region is we have abundant renewable hydroelectric power. Combining that with that hydrometallurgy technology means that we will have some of the lowest carbon footprint nickel in the industry. And that is in high demand, particularly from European and North American car manufacturers that are very focused on carbon footprint of the ultimate electric vehicle. So we have a structural shift away from stainless steel, but more importantly towards a green nickel product, which is our focus.
All right. And, what is the outlook that you see for nickel? I mean, you've talked a little bit about its importance in the growing EV industry. How does that also relate to potential battery chemistry changes? Looking at NCM versus LFP versus NCX. How will that impact band?
Yeah, so the nickel is an important part of the lithium-ion battery mix because it gives extra range for electric vehicles. So that is why there's high demand for nickel. So nickel will give range that is more exceeds the range of an LFP battery. And that is particularly important for the European and North American markets where the customers want to be able to travel from city to city and on highways, and so they need the nickel to increase the range of the vehicles. So there will always be room for LFP as well as NCM. It all depends on the customer's preference. So Tesla, for example, some of their vehicles are LFP. If you want a longer range vehicle, then you can buy a Model 3 which has NCM. So I think it's the Model Y has an LFP battery. So it's really customer preference depending on if you want to be able to extend your range. And will pay a little bit extra for a NCM battery.
So, ESG, sustainability, these are, growing key concerns for the industry. What sort of messages do you hear from investors? What are they looking for when they're assessing potential investments in this space? What are they telling you in particular?
Yeah, so we've been lucky to attract some major institutional investors like Fidelity and BlackRock, and there's a real focus from those bigger institutions on the ESG credentials of our business, and that I think really helped us attract those institutions. The fact that we had a real ESG focus in our marketing. So what they're really looking for is you want to be able to show your commitment to ESG through your sustainability report. We've also done an assessment, an independent assessment of our sustainability by a group called Digby ESG. So they've done an independent analysis of our ESG credentials, and they've given us a rating. So it's really about showing your commitment to ESG, having that independent analysis of your ESG credentials. We've also recently conducted a life cycle analysis of our carbon emissions of our product. A group called Minviro has independently analysed the greenhouse gas emissions of our product. That has also been verified by the Nickel Institute as well. So it's really about having good independent analysis of your credentials, but also telling a story and really each year showing progress on your sustainability journey. It's these larger institutions understand that as a junior, we can't do it all overnight. It will take time, and it is a journey. So we're on a journey towards net zero, and we're getting a lot of interest, particularly also from the end users. Well, the electric vehicle and lithium-ion battery industry is also now very focused on the ESG credentials of our business.
My next question was really looking at how juniors can set themselves apart, which you've kind of already gone into, but maybe looking at kind of how juniors can focus on being a sustainable company. I think there's a lot of kind of an idea that it's expensive potentially to change over your operations. Is there a benefit of being able to potentially start up with this kind of ESG focused goal?
Yeah, so being a junior, we have a great opportunity because we have a blank canvas. So a lot of our competitors and our peers in the nickel industry have tired and dirty infrastructure that they are stuck with. So they have to retrofit their existing infrastructure. We as a junior have the opportunity to build our infrastructure with a focus on ESG in the early years. So we have a blank canvas, which is a great opportunity for juniors. The benefit also is our ability to move quicker. As a junior, we can be more entrepreneurial. We can see the trends in the technologies, and we can move quicker than our majors, peers. So we can see a real opportunity being a junior to quick to market, embracing new technologies, and really pushing ahead of our larger peers.
Great. And my last question is really, what sort of advice or what sort of message is there for, say, investors looking to kind of focus on sustainable investments, or juniors or other mining companies that want to kind of fully take in the sustainable focus?
Yeah, so what's interesting with ESG and a focus on ESG is it actually is the right thing to do from an economic perspective. For example, renewable power combined with electric mining fleet, we've incorporated that into our study work, and we found that it's actually NPV positive to go down that path. So even though it may cost a little bit extra on the capital side, but it is worthwhile focusing on particularly on electric mining equipment and renewable power, because over the longer term it is actually a better economic result for the project. So yeah, I think looking towards companies that are focused on ESG, because it's not just the right thing to do from an ESG perspective, but it most of the time will actually add and improve your economics of your project.
All right, great. Do we have any questions for Scott?
I wonder if you could say a bit more about the Fidelity and BlackRock piece. What's the relationship like? Do they keep on top of you, or do they leave you alone? Are there things that they do that are helpful that you wouldn't get from an investor who wasn't interested in your ESG credentials? If you had to do it again, going to companies like that, appealing to companies like that, would you do anything different than what you did?
Yeah, that's a great question. So Fidelity has a larger position than BlackRock. BlackRock's position is fairly small. We have full access to all of their different parts of their business, and particularly their ESG team. So we work very closely with their ESG team because of our focus on ESG, but we understand how important it is to their investment. So we have probably better access, or we have more regular contact with their ESG team than we do with the fund managers. The fund managers, unfortunately, are used to managing much bigger positions than ours. So we're a very small position for their portfolio. So they're very happy for us to contact them if required, but really they let us do our thing, which is great. So yeah, so whenever I'm in the cities of those fund managers, I'll always catch up with them. I've been very happy with both of those groups. I suppose we probably got them on earlier than expected, which is I suppose testament to, I think, the ESG credentials of our project, but also the thematic as well. So these groups are very thematic driven. So they saw the theme and they've invested based on this theme. So we're very happy with how it's gone. If we were to do anything different, I don't think it was too early. I think it was about right. It got us on that ESG journey early, because as soon as they were introduced to the register, then we even more focused on ESG, which is great. And they've given us the resources and the access to the people in their team that have helped us through that process. So it's been a real collaborative effort.
Any other questions? All right, in that case, thanks, Scott, for joining me here today.
Thank you.